X and Y are partners in the ratio of 3:2. On 1st January 2006, they agreed to dissolve the firm. On this date, they had creditors of rupees 50,000 and capital balances of rupees 3 lakh and 2 lakh respectively. That is, the capital balance of X is 3 lakh and of Y is 2 lakh. The assets excluding cash of rupees 50,000 realized rupees 4 lakh 60,000. Remember students, it is not the book value of assets that is given here. It is the amount at which they were realized is given to be 4 lakh 60,000. The expenses of realization amounted to rupees 10,000. Show the balance sheet, realization account, partners capital account and the cash account. Now students, remember it is very clearly visible that in this case the balance sheet as on date of dissolution is not given to you. Always make sure that whenever you are attempting a question for dissolution of firm, you are required to have the balance sheet as on the date of dissolution. So based on this information, we will prepare a memorandum balance sheet for the firm, that is liabilities amount, assets and amount. Going by the information that is given, creditors were rupees 50,000. So on the liability side, creditors of 50,000. Capital balances, that is X's capital, is given to be rupees 3 lakh and Y's capital is given to be rupees 2 lakhs. Now students, nothing except cash is given on the asset side because it clearly says the assets excluding cash of 50,000. That means we had a cash balance of rupees 50,000. Besides this, nothing is given. So the balancing figure would be taken to be the book value of all the sundry assets. So we'll write sundry assets and this is balancing figure. And it has been derived by subtracting the totals of the two sides. The liability side shows a total of 5,50,000 minus 50,000. We will have sundry assets of rupees 5 lakhs. Now students, once we have the balance sheet as on the date of dissolution, we will proceed as we had done in the previous questions. We will prepare realization account now, partners capital account and lastly the cash account. So now let us move on to realization account. Now all the assets and liabilities that were appearing in the balance sheet would be transferred to realization account. Now while transferring assets, we must remember that all assets are transferred except cash and bank. So students, we can clearly see that on the asset side, there was only one asset, that is sundry assets, obviously other than cash. So sundry assets would be transferred onto the debit side for rupees 5 lakh. Their value was 5 lakhs. Then on liability side, we had only one liability, that was creditors. Remember students, by one liability I mean one liability which does not belong to the partners. So creditors were there to the extent of 50,000. Besides these two postings, there is no posting that is to be carried down from the balance sheet to realization account. Now students, let us come to the additional information. It was clearly mentioned that the sundry assets were sold off for 4 lakh 60,000. So by cash, asset sold 4 lakh 60,000. Then students, there was no mention about creditors. So it will be assumed that liabilities are paid in full. To cash, payment to creditors 50,000. Besides this, it was clearly mentioned that the expenses of realization amounted to rupees 10,000. So to cash, expenses rupees 10,000. Now students, we have made all the postings for all the adjustments that are there. Let us calculate profit or loss on realization. In this case, there appears to be a loss because the total of the debit side is higher. The total of the debit side is 5,60,000. Out of this 5,60,000, we will deduct 5,10,000. So the loss would be two partners capital account. Loss for X and Y, the total amount is 50,000, and this 50,000 would be borne by X and Y in their profit sharing ratio, which was given to be 3:2. So that means X will have to be a 30,000 and Y will have to be a 20,000. Now students, the total would be 5,60,000 on both the sides. Once we have prepared this, now we'll move on to partners capital account. Here we have before us capital accounts of X and Y. Now students, as per the balance sheet, the balance of X's capital as on the date of dissolution was 3 lakh and Y's balance was rupees 2 lakh. So we have posted these balances on the credit side because they represent liability for the business. So buy balance brought down 3 lakh for X and buy balance brought down 2 lakh for Y. Now students, there is no reserve, no goodwill, there is no treatment relating to partners capital. The only thing that is to be accounted for is the loss on realization. Remember, there was an entry on the credit side of realization account representing loss. So that would be posted on the debit side to realization account. Loss, it was 30,000 for X and to realization account loss 20,000 for Y. Now students, let us total it out and find the balance. 3 lakh minus 30,000. We will write it as to cash. Again, remember it is a case of dissolution of firm. The business will not continue after this date. So any balance remaining on the account of partners has to be paid to him through cash account. So in this case, it comes to 2,70,000 for X and for Y, this would be 2 lakh minus 20,000. So to cash, the amount payable to him is 1,80,000. Lastly, coming to cash account, there was a balance of 50,000 as reflected in the balance sheet. Now cash is an asset, so on the debit side, two balance brought down 50,000. Besides this, students, on the credit side of realization, you can see that there was a realization of 4,60,000 on account of asset sold. So to realization, that is assets sold, 4,60,000. Then students, again there was a payment of 50,000 to creditors. So by realization, payment to creditors, it was 50,000. There was a payment for expenses as well, expenses of realization. This was 10,000. And lastly, students, capital accounts of X and Y had to be settled by payment through cash. So by X's capital, 2,70,000, and by Y's capital 1,80,000. Now let us total it out. The total on the debit side is 5 lakh 10,000 and on the credit side is 5 lakh 10,000. Since there is no balance remaining in cash, that means all the formalities related to dissolution of the firm are now complete and this question ends here only. Remember students, again just reiterating the same point, since it is a case of dissolution, nothing should remain after you have realized all the assets, liabilities and paid off the partner's capital account. If anything remains, then you need to recheck the question. Remember, every amount realized on the sale of asset is utilized towards the payment of liability and finally towards the settlement of partners' liabilities.